let's move to your application for a banking license. Now, IDFC is seen as one of those most likely to get the license. Now, be that as it may, can you give us any timelines on what you've heard, what you expect on this?
I think
I'm not asking you to tell me whether you get a license or not, but
yeah,
what are the timelines are you?
I think everyone still believes that first quarter of next year, calendar first quarter of next year, somewhere in the Jan to March time frame, there would be at least a few licenses that would get issued. From everything that I'm hearing, it's not that they're going to issue all licenses at one shot.
First list or second list.
Correct, because I think some groups might take longer in terms of evaluation, the complexities are different, etc., etc. The only thing is, as it gets closer to elections, right, it could well be the case that that could delay the process a little bit, and licenses could then get issued post-elections. Although it's not really a government process, it is really an RBI process and an independent committee that has been set up to evaluate applicants. But as you know, in our country, it is not ever so divorced from government, and so from that perspective, the closer it gets to elections, I think the chances are that it could then get pushed beyond elections.
Well, getting a banking license is obviously long-term good for you. What are the short-term immediate challenges you see for yourself if you get it?
I think it's going to be obviously a long journey into banking, because building a bank is not a mean task. It'll take several years of hard work. I think we are very well positioned because we have a good starting point, right? We have a large balance sheet. We're very well capitalized. We have 20% plus capital adequacy. We have very strong corporate relationships, government relationships. So we have a good starting position. There are obviously areas that we don't have experience in, such as retail or in agriculture, rural, etc. But we've demonstrated our ability to build something in infrastructure from scratch. There's nothing preventing us from doing a good job in areas that we don't have experience in.
So while meeting the regulations of becoming a bank, whether it's adhering to SLR, CRR, or bringing all your financial services under the non-operative holding financial company, do you see any short-term pain for investors?
Well, clearly from an ROE perspective, for a couple of years after we start building out the bank, ROEs will come down because of the CRR, SLR priority sector, and overall cost to income ratios will go up as you start developing a branch footprint, etc., etc. So I think in the near term there will be a dip in ROEs, but from a long-term perspective we believe that's the right framework for IDFC, and so we're obviously focused on the long term. And it's at one level the short-term pain is okay, provided you have the conviction that you'll be able to bring back ROEs over the medium to long term, and we certainly believe that we'll be able to do that.
And do your investors also share that?
It depends on which investor you talk to, right? Because the guys who are focused on the short term will obviously don't have the patience to look at what ROEs could be 3, 4, 5 years out. The longer term investors obviously see the rationale and see the fact that banking is the more stable framework to be in over the next 5, 10, 15 years. And so from that standpoint, obviously the longer term guys are more sympathetic to this framework than the guys who are focused on the next 12, 18, 24 months.
What's the big advantage that a banking license gives you? Is it the ability to grow a balance sheet? Is it the access to, how important is access to cheaper money?
I think it's, so the reason why we decided to get into banking is twofold. One is, as I said, if we have to take a 10, 15, 20-year outlook, then, and if you believe, as I do, that the economy will come back to 6, 7, 8% growth rate, then banking should be an attractive place to be in. Secondly, I would say that from an asset diversification perspective, strategically it's exceedingly important for IDFC to diversify its asset base. When we started down the infrastructure path, our view was that infrastructure over 15, 20 years would be a secular growth story. I still believe it is a growth story, as I've said earlier, and over the medium to long term it is a large opportunity. But it is not secular, and it is because of all the issues that we're talking about. You could have periods of zero growth and periods of stress and periods of high growth. So both from a growth perspective and from a risk perspective, it's important for us to diversify the asset side of the balance sheet. From a liability perspective as well, as you become a large NBFC, if you're fully institutionally funded, just through banks and bonds, it's not necessarily a stable structure. We've seen this internationally as well in terms of what could happen to wholesale funded institutions. So I think over time it's important for us to develop a stable liability franchise, and from that standpoint, again, banking gives you the opportunity to develop sticky liabilities, whether it's current accounts, savings accounts, etc. And then the last point is that from a regulatory perspective, I think the RBI also would be more comfortable for large NBFCs to become banks or to do their lending through banks from a systemic risk perspective, because ultimately you do have RBI support to a banking framework. You don't have the same degree of support to an NBFC framework, and the regulatory differences between NBFC and banks are going to keep shrinking. So when you think long term, it just makes sense to go down the banking path if you want to be large in financial services rather than in an NBFC format, particularly given our focus in infrastructure.
You spoke about diversification. You're believed to have been behind a lot of diversification that IDFC did into fee-based businesses, whether it's investment banking, whether it's a mutual fund, whether it's institutional broking. Was that done with an eye on eventually getting a banking license? Was that done with an eye on reducing the cycle of risk?
No, I think when we proceeded down the diversification path, it was to try and figure out a balance between interest and non-interest income revenue streams that could deliver an attractive ROE to shareholders. So we have the lending business, which is capital intensive, which generates a moderate ROE, and the idea was to balance it with synergistic businesses that could help deliver a full suite of products to clients, which are capital light businesses but higher ROE, relatively speaking, so that the blended ROE for IDFC shareholders would have been attractive. Okay. So it's in that construct that we did, whether it's alternatives, private equity, investment banking, asset management, etc., were done with that philosophy of delivering a blend of capital intensive and capital light businesses such that the blended ROE for shareholders would be attractive.
Okay, alternative and private equity, since you've spoken about that, are you making an investment of buying 5% of NCDX through your private equity app?
Yes, that's already been announced, so we are investing in NCDEX. But the highlight of this quarter, the last couple of months, really has been the fact that we've been able to close on our second infrastructure fund in a very difficult environment. We've announced first close of about 650 million, and we're quite optimistic that we'll get to $1 billion. In this environment, when sentiment surrounding India is actually quite low and sentiment surrounding infrastructure even lower, our ability to be able to raise foreign money for Indian infrastructure, I think, has been a terrific outcome.
Vikram, pleasure talking to you. Thank you so much for joining us.
Thank you very much.